Hello traders and welcome to another video review. Today is Thursday, December 9th, 2021. Let's start with Forex calendar. Overnight, we got important data from China. The CPI and PPI data were released 3:30 in the night, and the CPI didn't beat the expectations. Because the actual reading was 2.3%, while the expectations were 2.5%, and the previous reading was 1.5%. So, nevertheless, the consumer price index is increasing, and the producer price index has beat the expectations of 12.1% with 12.9% actual reading. However, it's still below the last month reading on of 13.5%. So, London session, not much is seen here. No real important data. Maybe the New York session might get some liquidity to the markets. Unemployment claims and continuing claims together with the wholesale inventories are scheduled for release during the New York session. Unemployment claims and continuing claims at 3:30 and wholesale inventories at 5 o'clock. So that's about it. If we're talking about the basically the Forex calendar, let's take a look at the Australian dollar, because it might have impact. The CPI and PPI data from China might have impact on the Australian dollar. Daily time frame of the Australian dollar, as you can see, looks very bullish, and we have bounced from the level of 6,992 pips, and we have bounced 2.74%. So right now, let me just remove this measure. Right now we are testing the key technical resistance for the short term, of course, and this resistance is 7,171. So far we broke above this level. High was made at 7,188, 17 pips higher. However, there is no close above this level. That's the first thing. And the second thing, we are still in the negative territory, but as you can see, the momentum is picking up. It's no surprise it's picking up, because just a few days ago momentum was on the extremely oversold. Market conditions are very low, both price and the RSI readings. So right now it's very dynamically picking up. 2.74% of a bounce. It's better than 1.26 than it did last time. So we should wait for another market wave to the upside, because this one doesn't look completed. The next target is 7,224 and 7,279. So that's about everything. If we talk about the Australian dollar, let's take a look the British pound to Japanese yen pair. British pound to Japanese yen pair is doing exactly what it should after the 61% of the Fibonacci retracement. 152.46 had been violated, so we don't need it anymore, and our trend line almost got the point here. As you can see, just a little bit breakout to the upside above the black trend line. However, didn't work for long, and the bears were still very active, and they push the price lower. So right now we should be extremely concerned about the level of 148.46, 149.02. Those levels are the demand zone. As you can see, many times this zone had been tested before. So any breakout below this zone is very bearish indication for British pound to Japanese yen. So please keep an eye on this zone, 148.46, 149.02, because any breakout would definitely lead to the sell-off towards 145.03, which is, as you can see, almost 400 pips lower. Generally speaking, the British pound to Japanese yen is in an uptrend, right? We are trending up and up and up after the post-COVID lows were made. However, this market might be doing some sort of the deeper correction right now. There's one more level I would like to put on the screen. It's this high here, this high from the 2019 and a little bit higher. There you go. So maybe our zone is just a little bit more wider than we initially thought, and this zone might get extended towards 147.93. Well, 50 pips, not much of the change. However, it's still important. So that's the primary demand zone for the British pound to Japanese yen. Any breakout, very negative signal will be made here. Crude oil. What is crude oil doing? Nice bounce after 26, almost 27% sell-off. So we are testing the level of 73.15, and if I'm not wrong, we have retraced about 50%. There you go. Yes, about 50% of the last wave down. 50% is 73.93, very close to 74.37 technical resistance. So right now the levels of 67.97 and 69.62. Okay, and the third level of 70.59, all of them are now technical support for the price. Of course, it's a short-term technical support, because it looks like this bounce on crude oil was made because of two reasons. Bulls were defending the short-term trend line here, the orange one, and the market conditions were extremely oversold. So this is a corrective bounce toward typically 50% of the previous wave to the downside. So let's say 73.97 has been hit. Almost hit, so we are waiting for the confirmation of a reversal. So today's candle, as you can see, this is daily time frame chart, so there is no doubt this candle might change in the near future. However, it starts to look kind of a red already. So if you are talking about crude oil, let's take a look at gold as well to see what is going on there. Nothing. Basically nothing, but as I don't know if you remember, but we were talking about the level of 1760 as a key technical support, horizontal support for market, and there is a conjunction of two levels here. One level is around 1760 and comes from this trend line support. So right now you can see it's 1764, let's say, and the second one is of course the blue trend line support as well. So please keep an eye on the gold, because we are still not below 1760, but we are still not above 1808, which means momentum is still negative, and there is really I can't see any bullish attempt, any demand coming to the market here. What I see are long upper wicks, and it looks like we are just warming up before another sell-off in gold below 1760. The next target in that case would be 1741 and 1720. Please brace yourself, because there is a significant indication that another wave down on spot gold market is coming soon. And last but not least, let's take a look at the Ethereum. What is Ethereum doing? Very nice end of the wave 4 ABC correction here, and we are still waiting for wave 5 to develop, right? So we still need wave 5 to the upside. First target $5,000, very big pin bar here. 5 waves in wave 3 are done, so we don't need this one anymore. We have 3 waves here, and we have a ABC correction to the downside in wave 4. There is another possibility that wave 3 had been made here, for example. Not this one, but wave 3 might be made here. Wave 4 as an internal correction might be made somewhere here, and the wave 5 was made here. So this is even better for another wave to the upside. Why? Because in that situation on the Ethereum, let me just take my ABC Elliott wave correction pattern tool. This is A, this is B, this is C. This is completely new new pattern, new cycle. Here of course we can still put back our trend line, and this count is even better for higher prices that will soon come to the Ethereum market, because we are now in developing of another wave to the upside, impulsive wave. So if this is, let's say, wave 1, this is ABC corrective wave 2, we are now looking for the wave 3 to the upside. But first we need to break above this golden trend line, and we need to break above wave 5 high, which is at the level of 4,863. Target 5,000, but that's not enough, and it looks like the price of Ethereum can go way above $5,000 if this scenario is correct. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.